Welcome to episode 25 of the Cashflow Connections podcast. The topic for today is international investing strategies of the most interesting man in the world. Remember when I said if you guys kept sharing the podcast with your friends and leaving reviews in iTunes that we'd be able to get more high-profile guests on the program? Well, we're currently getting about 5,000 downloads per month, and more attention is coming to the show on a regular basis. So today, we get to experience some of the benefits of that momentum. Our guest is very well known across several sectors of the investment space, and for quite well-deserved reasons. We're going to discuss a lot of topics that we've never discussed in the program before. We're going to talk about whether or not it's actually important to consider investing internationally and how you can mitigate the risks associated with investing in a new country with new tax laws and new cultures that you may not already be familiar with. We're going to talk about which countries currently present the most favorable risk-adjusted returns for U.S. investors, as well as some changes in laws that affect U.S. citizens and their ability to invest internationally. So if you're interested in any of these topics, you're really in for a treat. This is a really interesting conversation, one that I know that I'm looking forward to listening well into the future. Now, before we get to the episode, I have received a lot of comments about episode 1 with Jeremy Roll, where we talk about conducting due diligence on commercial real estate investments. There is a lot of content there and takeaways, so much so that we're going to turn it into an ebook. So this way, whenever you're conducting due diligence on a self-storage deal, for example, you can just scroll to that part of the book about self-storage. Or if you're reviewing underwriting assumptions on a multifamily deal, you can click the multifamily chapter and you can read what Jeremy and I had to say on the topic. It's going to be a lot easier given the fact that the episode is about an hour long and is just completely dense with good information. But you have to have an account with Cashflow Connections to get the ebook. So if you haven't done so yet, make sure to go to cashflowconnections.com, create an account with us so we can send you this free ebook as soon as it's completed. Remember, the ebook is free, but it is only available to people that have created an account with cashflowconnections.com. So make sure to go to the website, create an account, and we'll send you this ebook as soon as it's done. All right, let's get straight to the episode. How's it going, everyone? Today we have Doug Casey, who is best known as a speculator, economic commentator, and author of 7 books. He has been a New York Times bestseller and has been featured on hundreds of radio shows as well as Time, Forbes, and many other publications. He is currently completing a series of 6 novels reforming the reputations of politically incorrect occupations. The first, Speculator, was released in July of 2016, and the second, Drug Lord, was recently released in 2017. His firm, Casey Research, publishes a variety of publications and websites with a combined weekly audience in excess of 300,000 individuals, largely high net worth investors. And Mr. Casey has visited 155 countries, most of them many times, and he's lived in 10. And he has been active in polo, skydiving, martial arts, scuba, auto racing, and competitive shooting. He currently lives mainly in Argentina, Uruguay, and Aspen, Colorado. And Doug, obviously it's an honor to have you on. I know you get this a lot, but we actually have the world's most interesting man here today. So really looking forward to this conversation today.
Well, thank you, Hunter. I'm very flattered.
So before we jump into this international investing stuff, let's talk just briefly about the lifestyle. How did you really get started in the international lifestyle space?
Well, my junior year in college, which incidentally I recommend any young listeners forego. I think college is generally a waste of time and money, or a misallocation of time and money would be more accurate. But when I went to college, I had an opportunity to spend my junior year abroad, and it happened to be in the University of Freiburg in Freiburg, Switzerland, and that's where it started.
Okay, awesome. And you're obviously still traveling quite frequently. What's your major driving factor in keeping you moving around?
Yeah, well, it's like being an upmarket homeless person. Right now, I'm speaking to you from Cafayate, Argentina, as a matter of fact. And since we have fiber optics down here, it's almost like I'm in the same room with you, even though I'm in the high Andes right now. What is driving me to? Well, actually, I'm less driven to travel around because I've been to so many places, most of them, as you said, numerous times, that it's really become a matter of been there, done that. But on the other hand, I'm glad that I've been there and done that. I don't know what the meaning of life is, but I don't think you're going to find it just staying rooted to one place like a potted plant. So
Right.
I advocate that people reach out and travel.
When you're looking to travel or looking at investments in other countries, overseas, different cultures and stuff like that, what is your major driving factor in kind of diversifying your life, but also your portfolio internationally?
Well, I wrote a book. Actually, it was my first book. And I wrote this book in 1977, or was it 76? Doesn't matter. Called The International Man, a guidebook to making the most of your personal freedom and financial opportunity. Now, why is that relevant? Because uh, everywhere I go, I'm always looking for ways to optimize further my personal freedom and my financial opportunity. And I think you have a lot more chance of doing that if you go to a place where you are unusual, your ideas are unusual, hopefully where it is not a level playing field, where if you stay in the US, you're just like a couple 100 million other people. You have no marginal advantage, really. But you transplant to Africa, and you've got vastly different experiences and more capital and connections. And so that's what you want to try to do. You want to give yourself that marginal advantage, put yourself on an on level playing field, tilted in your direction.
Yeah, that's interesting. And you mentioned Africa, for example. It's interesting because when I look at investments, when I consider to be favorable risk-adjusted returns, it completely could be different than someone who has a global perspective on financial assets. So when you're looking at the world right now, where are you seeing some of the most favorable risk-adjusted returns in terms of investment?
Well, that is key what you said, Hunter, about risk adjusted returns. Um, First of all, in the United States, I don't think that exists right now, quite frankly. The US is in a twilight zone where everything is overpriced. Now, that would seem to be metaphysically impossible. How can everything be overpriced? But that's just about true. Stock market wouldn't touch it with a 10-foot pole, even though it probably is going higher. Bond market, it's not just a bubble, it's a hyper bubble. Uh, Best short sell in the world I can think of.
Hmm.
Real estate, floating on a sea of cheap debt, have no interest in that. So I think the only place you can look for opportunity right now, risk adjusted, is outside of the US. Uh, and there are some opportunities available, but they're not the type of thing that you can access uh, from your apartment in Omaha. You're not in Omaha. Where are you exactly?
Yeah, I'm in Los Angeles, California.
Ah, okay, great. I'll be in San Francisco next week, which I don't want to do, but I idiotically obligated myself to go and give a speech there, and now I have to do it. It's a long way from Argentina to San Francisco, I promise you.
Okay, well, in terms of, are there any specific countries that are sticking out to you or any specific asset classes? I mean, I know that real estate in the United States probably isn't your favorite, despite, that's been our focus. But in terms of, international space, is it gold? Is it crypto? Is it real estate in some country that I haven't really considered? I mean, where are you finding what would make you jump out of bed if you saw an opportunity in a specific asset class in a specific country?
Well, let's talk about the cryptos for a moment. I was first introduced to them probably, must have been 2013. I think I have that year right. When here in Cafajate, Argentina, a young Belgian guy, uh, I invited him to lunch. He was coming here, coming through. And we had lunch, and he explained Bitcoin to me. It was a new concept to me at the time. And I missed it. I missed the value of Bitcoin. He was selling it as money, but I didn't see that you wouldn't get stuck holding the bag with it. And since then, I've become a big fan of Bitcoin and the cryptos, and I'm pretty involved in them. For instance, Hive Blockchain, which is the only public crypto company out there today. I got involved in that early. So, yeah, I looked at that. Am I interested in the cryptos right now? You know what? When I was introduced to them, Bitcoin was $13, and now it's 7,000 or whatever. No longer the speculation it once was. Going higher, maybe, but I'm not terribly interested anymore. Much more interested in gold, actually, because people, it's a reasonable value. It's not cheap the way it was in 1971 at $35, or for that matter, in 2001 at 250, when it was cheaper in real terms than it was at $35 in 1971. It's reasonable value today, and since I think we're heading into a massive global depression, I think there's going to be a panic to gold, so I'm an active buyer of gold. What else can we look at? I mean, right now you can buy interest-yielding debt in Argentina. Right now, yielding 15 to 20%. It's a play on the currency. Is the peso going to turn into toilet paper, as it historically has, or do we have several years of stability? I think it's going to be the latter with the new government here. So Argentina is recovering rapidly. Actually, it's probably one of the best countries in the world to be in right now. So that's one thing. If I was 30, I would be in Africa, no question. That's where all the action is going to be in the decades to come for many reasons. And that is a genuine unlevel playing field, which I'm looking for. But few people will do that. It's too foreign, too alien, too bizarre, too different for most people. So that's the big opportunity that people won't take advantage of. But what else are you thinking of? Anything in particular?
Yeah, I mean, you touched on a lot of things. Just going off of what you just said, when I'm considering investing or looking at, let's say, for example, moving to Africa to take advantage of discrepancies there and my skill set and the access to capital that I may have being from Los Angeles in particular, one of the risks that I would perceive that going in would be my lack of understanding of the legal system, the tax laws, the customs, et cetera. And I wouldn't really have an infrastructure or network in there to kind of facilitate that. In LA, for example, I have built up a network, which is really responsible for my entire business. I rely on a lot of people on a consistent basis. How do you go to a different country, different culture, and establish that network and really learn the legal system, learn the culture, learn the tax laws enough to make an investment in that space?
That is an excellent practical question, and I'll tell you what I've always done. In the past, I don't do this anymore, but in the past, when I've gotten off a plane, get into my hotel room in a city where I've never been before, first thing I do, or used to do, is go to the Yellow Pages. Well, I use a computer today, same thing. And I would page through, see what businesses there were. Anything caught my eye was interesting, but I would always go to lawyers and real estate agents. Why? Because everywhere they're generally they're power centers. The people that have money and power use lawyers and real estate agents. And you can get an appointment, if you're a foreigner, certainly, with any one of them anytime, because you might be a big client. So I would interview these guys, and maybe 1 out of 3 or 4 times, I'd have a rapport with them. One thing leads to another. Half the time I got invited home, since I'm a foreigner. I'm exotic, I'm different, I'm interesting. Come home for dinner with the family, to a party, you meet other people. You do this, repeat it. I always go to art galleries too, because I'm interested in art. Commercial art, things that you buy in commercial art galleries. And the same thing happens. So you get to know people. And I've found that in these countries, within a week, 10 days, 2 weeks, I can be sitting down with the president of the country. I kid you not, because I've done a lot of this type of thing. So it's a process. It takes time, but doing these things in the third world or the fourth world or the bottom of the barrel world, if you would, uh, business isn't as big a deal as dealing in political entrepreneurship. Unfortunately, the reason that these countries are backward and bottom of the barrel is because they're political. It's all about politics, the government, and they're kleptocracies. So you have to orient yourself towards that. Knowing the tax laws and other things isn't nearly as important as getting wired with the people. It's all about corruption. It's disgusting. It's one of the reasons why, although Africa is going to advance, it's not going to advance nearly as fast as it should. But that's a good thing from your point of view as a speculator. Because remember, one definition of a speculator is he's somebody that capitalizes on politically caused distortions in the marketplace.
Absolutely. Absolutely. And in fact, this is something that comes up recently, and on the show, we've talked about this before. I invest in mobile home parks in the United States, and I was actually on Jeff Berwick's show, who is a huge proponent of you, and he's a huge fan of yours. And he mentioned this is an interesting strategy because one of the reasons I invest in mobile home parks is because of the fact that the combination of the Social Security debt bomb that's about to go off and the fact that there's so many people relying on Social Security, they're pushing more and more people into lower incomes. And then simultaneously, the government is making it illegal to build new mobile home parks. So this is a very rare situation that I think you could probably see where I'm going with that. There's some other points there too, but that's kind of my Doug Casey impersonation there. And
a very good one. And I completely agree with you. That's a superb analysis of the mobile home or trailer park, if you would, situation. Yeah, correct. And I would add into that storage units are not a bad bet either, that are similar, where you're renting real estate for a very high price per square foot.
Well, that's music to my ears. Those are the two asset classes that we've been focusing on for the last couple of years now, and for some similar reasons, the recession-resistant component. Both you and I agree that we're due for a significant correction, and those assets, the demand for the assets is really uncorrelated at best, if not inversely correlated with the performance of the economy. So it makes an interesting perspective. But that's something we've talked about a million times in the show. I want to get some more interesting, some Doug Casey specific conversations going. So let's talk about, the United States in particular. It's a very unique, for people that aren't aware of this, the United States is viewed very differently than almost all the other countries out there for many, many reasons. So in America, in the United States, a lot of people that are proponents of the internationalization lifestyle, it's particularly important for Americans to get a second passport. Doug, do you want to speak to that briefly about why that's so important and why that's come up so many times in some of the literature?
Yes, I think it's actually quite critical, Hunter, because if you look at your U.S. passport, it says right on the document, property of the U.S. government. It's not yours. They can take it away from you. And if you don't have a passport, you are trapped like a lobster in the U.S. Or if they cancel it when you're abroad, there's one place you can go, back to the U.S. So you really need to be a citizen of the world and have several, if possible, other passports so that you're not under the control of one group of people in the government. So I think it's incumbent upon everybody to try to do that. There are a number of ways of doing it, but people should get going. You don't want to be like a Jew in Germany, or for that matter, anybody in Germany in the 1930s, or somebody that was in Russia in 1917, or in Vietnam in the 50s or 60s. I mean, when the going gets tough, the tough get going.
Mm-hmm. That's a good point. And, what's interesting about this is if, you start to pursue this and you get a second passport and you kind of go through that process of potentially opening up a second bank account or something like that, it's interesting that you'll find that there's a lot of warnings that say, keep in mind that if you're an American citizen, you may not be allowed to do this, this, and the other thing. First of all, why is that? What is your perspective on why that is, all those warnings about United States citizens and how the different laws apply to them, even overseas?
Well, look, we have a Congress in this country, and what they do is pass laws. Every single day, they're passing laws. And those laws aren't increasing your freedom, they're restricting your freedom. They all have penalties, more things that you can't do, except for the laws that are basically passing out money to politically favored people and organizations. So what was I going to say when I started off to say that?
Just the uniqueness of the United States government and the uniqueness of the
yes.
laws applied to those.
Yes, exactly. So it used to be that the U.S. was known for being the freest country in the world. And it was, in fact. You could do more things more easily without asking permission in the U.S. That's all changed. America no longer exists. It's now the United States, which is really just one of 200 other countries that are covering the world like a skin disease at this point. You actually have much less freedom in the U.S. than you do in other countries. Even a recent poll, who was it that did this? Was it Freedom House or some other organization, Heritage Foundation? I forget who. But the U.S. was only rated, the average standard of living in the U.S. we'd fallen to number 13 in the world, an average standard of living. And we're descending further for lots of reasons that we could talk about at length. So I look abroad. Look, America isn't loved so much the way it used to be. We're basically known for invading other countries at this time. We've got combat troops in 100 countries around the world right now. And these aren't the friendly GIs that were passing out chewing gum and chocolates as they were kicking the Nazis out of France. I mean, these are dangerous dudes, and the locals don't appreciate their being there. So perceptions of America have changed a lot, along with America itself over the years.
Yeah, absolutely. In fact, this is something that I think you've touched on as well. People may be surprised to hear this. The United States has a law which basically says you will be taxed globally, regardless of whether or not you live in the United States. Even if you move to Italy for 9 years, you still pay federal income tax in the United States, technically. And it maybe hearing that sounds, oh yeah, that makes sense. Well, there's only one other country that does that, and that is Eritrea. And when you look at it like that, Eritrea, it's one of the least free countries in the world. There's no free press. There's only one legal political party. And so that'll kind of give you an idea. And by the way, the Eritrean global tax is like 3.2% as opposed to the federal income tax of 30 something percent, which is just, it'll kind of give you a perspective of why that's important.
Well,
go ahead.
But the good news about Eritrea is they can't enforce their law, but the American government is like an octopus all over the world. And
Right.
If you don't pay that tax, you could be in big trouble. You better not come to the U.S. anyway.
Right. They have the actual capacity to effectuate that law, which is, but still other countries don't do it, which is one of the reasons why this situation in Puerto Rico that's opened up is really interesting. So let's talk just briefly about the tax haven and the tax situation in Puerto Rico and what your thoughts are on that whole situation.
Well, you remember in West Side Story when Maria's friend sings, Puerto Rico, my heart's devotion, let it sink back into the ocean. It shouldn't be part of the U.S. to start with. It's a totally different culture and ethnicity and language and everything. It was a spoil of war from the Spaniards 120 years ago. So that's my first comment about Puerto Rico. But the good news is it's a tropical island. Half the Puerto Ricans live in the U.S. at this point. After the hurricane, which really destroyed the island. I haven't been down there, but I've had firsthand reports. I think there's a lot more Puerto Ricans that are going to go to the U.S. It's an economic basket case. because of the stupidity of their politicians, this gigantic debt that they have and so forth. It will be defaulted on. But the good news, as you pointed out, is they've got these two laws. I think that what are they called? Provision 20 and 22.
Correct.
That, yeah. If you move to Puerto Rico and spend more than 6 months of the year there, and spend less than how many months in the U.S.? They've got another
I'm not
rule
sure.
there. Yeah, but you can't spend too long in the U.S. That you are free from capital gains tax, which is in a booming stock market. That's a big deal. And if you set up a business there, your maximum tax is like 4%. So it's possible to live in a place where Amazon will deliver overnight still, and you're tax free. I've thought about living in Puerto Rico for that reason, but as much as it would save me, it's just not worth it.
Do you know what the tax implications are if you live in Puerto Rico and invest in United States real estate?
I think that provision applies. It applies to stocks, it applies to bonds, and I presume it applies to real estate. So, yes, you could live in Puerto Rico, Hunter, and as long as you didn't spend how much you'd have to spend 6 months in Puerto Rico, and you can't spend more than I think it's perhaps a month in the United States, something like that. I can't remember. Your capital gains on U.S. real estate would be tax free.
Wow, that's really interesting. And I looked at that for several reasons. And I have a few friends that actually moved down there to start their businesses. And it's possible. And because of the fact that this is, I was talking about earlier with the Eritrea, this is pretty much the only way that you can really do it. It's probably the most streamlined and straightforward way to avoid paying the federal income tax. There are other options out there, but this one is really the most streamlined. There was something recently in
Really is,
2010.
unless you renounce your U.S. citizenship, which is
Exactly.
too radical a move for most Americans, number one. And number two, it's expensive. Because like the Soviet Union used to have, we have an exit tax too.
Right. Yeah. In fact, brings up a good point. We get to talk about a lot of stuff I don't usually get to talk about. If you Google or go to Wikipedia and look at the U.S. exit tax, you will find something very funny. The length and detail orientedness of the U.S. exit tax is only mimicked by the Third Reich's exit tax during World War II. And there's several other countries that have something similar, but they're basically like 2 or 3 sentences when the U.S. is like 4 pages. So that'll kind of give you an idea. It's the fence is clearly facing inward. It's like in North Korea. They're not trying to protect us. They're trying to keep us in. So part of
that fence on the southern border with Mexico, it may keep the Latins out, but also it can keep Americans in. Disturbing.
Absolutely. Walls tend to do that for sure. And historically speaking, part of that comment about the getting rid of the citizenship, et cetera, there's something that happened in 2010, the FATCA, the Foreign Account Tax Compliance Acts of 2010. Does that affect your perspective on this, particularly when it comes to U.S. investors? Or talk a little bit of us about what that is and how that affects your perspective.
Oh, this is a nightmare, a genuine nightmare. Most Americans are unaware of it. FATCA makes it not impossible, but very hard and very inconvenient for an American to open up a foreign bank account or a foreign brokerage account. That makes it much harder for you to get your money out of the country. It makes it much harder for you to diversify your assets politically. Why? Not because it's illegal. It's not. But when you go to open up your bank account, I don't care if it's in Switzerland or Hong Kong, I don't care where it is, anywhere in the world, chances are very, very high they're going to turn you away as soon as they see your American passport, because they just don't want to deal with the aggravation of having American clients. So you can. There are banks and brokers, but that'll take your account, but you have to look for them. And you have to be connected, and you have to be a big client, or you have to live in that country. Then they'll take your account usually. But this is a huge restriction on Americans' freedom and flexibility, and horrible, horrible.
So, out of curiosity, then, if you have that second passport, when you open a bank account in a foreign country with the second passport, then you're much less likely to be subject to them refusing to let you to do their banking there, or do they do that search and find out that you're a United States citizen, et cetera, et cetera? I mean, does that kind of avoid that problem?
It may avoid it. For instance, there was a South African friend of mine that was going to open up a bank account in Uruguay. So she showed her South African passport. But perhaps because she was an English speaker, I don't know. They asked her, even though it was obviously she wasn't an American, she was a South African. They asked her, are you also an American citizen or do you have a green card? So they're serious about this.
Mm-hmm. Mm-hmm. Pretty crazy. So,
oh, it is.
Something you mentioned earlier, kind of the combination of the debt and the cheap debt causing bubbles in a variety of different asset classes. It's challenging when you talk to the layman about these topics because of the fact that it's very challenging for them to see tangibly what effect they should be worried about. So when you talk about debt to GDP ratios, for example, what tangible results should people, the average everyday person, be worried about if there was a significant correction, or what the negative impact could be with this debt?
Well, the first thing I like to point out about debt is it's the opposite of savings. In other words, when you have savings, you're living below your means. You're producing more than you consume, obviously, and savings is the difference. So, what is debt? It basically means you're living above your means. But how can you do that? Two ways. The debt is either you're borrowing the capital of other people that have saved in the past, or you're mortgaging your future earnings. Those are the two ways you can contract debt. So there can be consumer debt, which is always bad, or there can be debt for production, which can be very good. That's how people deploy their savings, by lending for production. But there's so much debt in the world, and most of it is government debt, which is all consumer debt. It's all wasted. Or it's not productive debt. I mean, most of the corporate debt in the world today, these corporations aren't borrowing to build factories. They're half the time they're borrowing to buy their stock back out of the market. Why? Probably to jam the price of the stock to make the executives' stock options worth something. No, that's a horrible thing. Limits your flexibility. It's something that you shouldn't have.
Got it. That makes sense. And so
Although,
because of this, yeah, go ahead.
You're a real estate guy, Hunter, and I can see having debt on real estate in today's low interest rate environment because it'll probably be inflated out of existence. So it could be good for you, assuming the real estate doesn't crash. So I'm trying to look at all sides of this.
Sure. It's two sides of the same coin, but it can be, it can produce higher returns, but at the same time, it's going to increase your exposure to risk, obviously.
Yeah.
So, this is something that we've emphasized over and over again, which is that the financing terms of real estate is typically the most important. And when you hear horror stories about real estate, it almost exclusively has to do with debt, coming due at the wrong time, not being able to pay the debt service coverage on a monthly basis, et cetera. So one of the problems that I see with having a major debt caused bubble is entering something similar to what Japan has been going now for several decades. It used to be called the 10-year recession, and now it's closer to the 20-year recession, et cetera. Do you think the United States is heading for a Japan-style 20-year recovery?
Oh, it's much more serious than what's going on in Japan. And Japan is very serious. They are absolutely going insane with the government borrowing money and selling it to the central bank and printing up yen. I mean, the yen is going to reach its intrinsic value even sooner than the dollar does, the intrinsic value being roughly zero. It's a giant accident waiting to happen, especially when you combine that with the demographics of Japan. It's like an old people's home. No, look, I'm of the opinion that we are we entered a gigantic financial hurricane in 2007. And we went through the leading edge of the hurricane in 8 and 9. And then governments, not just the US government, but the Europeans, the Chinese, the Japanese, and certainly the US, printed up scores of, and all these minor countries too, printed up scores of trillions of new currency units. And that kind of poured oil on the waters, bailed out failing institutions. And it's been a long, big eye of the hurricane. And when we go out of it soon, it's much overdue, in my opinion, years overdue. It's going to be unbelievable. It's going to be financial chaos. So I'm happy to make that prediction. I hope I'm wrong because I like good times more than bad times. It's going to be unpleasant and inconvenient when the economy collapses again, but it's going to.
Yeah, and just kind of for the listeners that may have not studied on the Japanese situation, they entered what a lot of economists have come to call a balance sheet recession. And the interesting thing about this is that most of the texts, business books and otherwise, kind of anticipate that businesses will maximize profits first. But something takes place when you have a bubble that is created by debt and you have asset prices across multiple different assets, all financial assets collapse. In Japan, financial assets collapse by like 80% in certain circumstances. When that happens, the number one priority for businesses goes from making investments to have profits to paying down debt. Now, that's fine if it's only one sector of the economy. But when you have everyone from car manufacturers to real estate investors to stocks, every single type of business simultaneously doing that, it's literally as if money is being taken out of the economy because it is kind of being paid down debt. And so this can really compound the effect. And it's been years and years and years as this has happened, as Japan's kind of worked through this. And part of that process has caused people, the fertility rate has decreased significantly because of the fact that the focus, again, similarly to the profit focus, the focus has been to really just recover financially. And, in my opinion, you've seen a little bit of that in real estate as well, particularly in markets like California, where people just got devastated. So the mania hasn't come back yet, but you still see inflated prices in a lot of different asset classes, but still people are skittish out there, and rightfully so. So let me talk to you briefly about interest rates. Do you think that we will see negative interest rates in the United States?
Listen, I thought it was metaphysically impossible for there to be negative interest rates anywhere, but it turned out I was wrong. I mean, these people that run these central banks are actually criminally insane. High interest rates tend to encourage saving, and saving is a good thing. It means you're accumulating capital. But negative interest rates, they make it idiotic to save. It forces you to speculate in things. Now, as a speculator, I expect the chaotic environment, high inflation environment in the future. There's going to be lots of bubbles. It's going to be wonderful for speculators that are sophisticated and know what they're doing. But most people are not. And most people are devastated by it. I mean, most people just save their local currency and they get wiped out. So this is very serious from a sociological point of view, demographic. This is how you destroy a country. So these people that run these central banks, everybody looks upon them as saying, oh, they have PhDs, or well educated, they know what they're doing. No, they're complete fools. They don't know what they're doing. They have no grip of economics at all. So, I mean, they're morons that got themselves into this high political position where they can afford $2,000 suits and go to conferences where they all eat caviar. It's terrible. Central banks should be abolished. They serve no useful purpose. And there weren't central banks 100 years ago. They weren't necessary. People used money was nothing but a medium of exchange and a store of value. So people used gold. It's well suited for that. So this is going to end badly. Don't look to the
Yeah,
central bank for an answer.
yeah,
They're-
absolutely. I agree completely. I mean, just, to sum up that entire point, it's like, are monopolies good for consumers? No. The central
No.
bank is a monopoly. Okay.
Yeah,
It's not going to be good. Just as simple as it can be. You
exactly.
have invested, real estate may not be your number one focus, but I know that you have invested in real estate in the past. When you invest in real estate, what's your typical strategy there? And I guess tell us a little bit about a recent or previous real estate investment that you've invested in.
Well, Hunter, real estate has been very, very good to me uh, because we've been in a worldwide, essentially, real estate bull market since the end of World War II. Now, I am of the opinion that this may be coming to an end uh, as a super cyclical bull market. But when I'm in the United States, I've always lived in Aspen, Colorado. And Aspen has been in a perpetual bull market from day one. So I moved there in 1980, and everything's gone up. You didn't have to be smart, you just had to buy something. But it's been good to me in other places too. In Spain, I moved to southern Spain, in Andalusia, Marbella, actually, when a few years before it became part of the European Union. And my argument was, well, now it's become part of the European Union. It's the cheapest country in Europe. All these Swedes and Germans that don't like the cold winters are going to move to southern Spain and bull up real estate prices. Yes, it happened. And Spanish real estate treated me very, very well. New Zealand. I originally, I've been there several times before, but when I was playing polo, I went there in the late 90s, and it was the cheapest place in the world to play polo. I had been playing in Palm Beach, which I didn't like. I didn't like the attitude. I didn't like anything about it. It was very expensive. So I bought real estate there, and it was, at the time, the Kiwi dollar was only 38, 39 cents, and prices were depressed because every Kiwi with any moxie or gumption was on a plane to London or LA or Sydney to get the hell out of there because it was becoming the shallow end of the gene pool. But I liked it for the polo, and I bought a lot of real estate. And the Kiwi dollar doubled, and real estate went into a hyper bull market because of the reforms that had been done just a few years before by Roger Douglas. So that was good to me. I can tell you a lot of real estate stories internationally, and they've all had happy endings, with the exception of this one here in Argentina. I bought in to Argentina in a big way, and by that, it was me and some friends, me alone and me and some friends. We bought, oh God, we bought 250,000 acres of land down here, plus a lot of other smaller pieces. And I thought, Argentina went through a catastrophic monetary caused depression in 2001, 2002. So I thought, we're buying at the bottom. But how did I know that, the previous criminal president, who was a criminal, but not such a bad criminal, would be replaced by his wife, Christina, who, is a throwback to the communist 60s. But now that the government's changed, it's probably the most progressive government in the world. Progressive in a good way, not in the progressive way. I think I'm finally going to make money here in Argentina. I got my fingers crossed. So no, listen, I'm a fan of real estate. I think you just got to be in the right place at the right time. That's a pretty obvious statement, obviously, but easier said than done.
Sure. Well, you mentioned the kind of economic crisis that Argentina went through. Is Venezuela on your radar at this point?
It should be, but it's not. And I don't think it will be. And I'll tell you why not. The problem with Venezuela, all these South American countries are different. They're like islands, all of them. They're all different. And trouble with Venezuela is the oil. It's got these huge oil reserves. And this is a problem when you have a strong central government. It means the government becomes where you go to steal. All the power goes to the government. All the oil revenues go to the government. Everything goes to the government. And the country's become totally corrupted, especially with this idiot that's running the place now, Maduro, who is even worse than Chavez was. He's actually of low intelligence in addition to everything else. So the problem with Venezuela is the oil is still going to be there. And it's such a disaster at this point. What are they going to do? Are they going to free marketize the place and privatize all the oil? And this is my hobby, incidentally. It's going to third world countries and pitching them on a scheme to do exactly that. I don't think it's going to happen in Venezuela. But maybe after they kick Maduro out, maybe they'll get a Pinochet. Well, it's possible. That would be a good thing. Pinochet is a person with a very unjustly deserved bad reputation, I might point out. We could talk about that if you wanted to. Incidentally, when Pinochet came in, after Allende went out, you could make such a score in Chile. I remember in Chile, I was in the best subdivision of Santiago, visiting a friend of a friend. Fantastic house, 10,000 square foot house, swimming pool, tennis court, all this stuff. Best part of the town. He said, when Allende was in office, I would have sold this house to you for $25,000, and all my neighbors would have done the same, but there were no buyers. Now, that house today in Santiago, 5, 6, 7, I don't know how many millions. So this is how radically things fluctuate in these countries when they have political disasters. I could tell you a lot of stories about those. I didn't buy the house. I should have flown to Chile in 1973, but I didn't have much money in 1973. So
makes sense. And for the listeners out there, if you haven't, if you're not familiar with the story in Chile, Google the Chilean miracle. And if you've never heard the story before, it's pretty unbelievable, especially since it's not very commonly talked about. Basically, the Pinochet hired and kind of put into power a lot of people that were significantly influenced by Milton Friedman, who is one of the most, one of my personal influential people when it comes to understanding economics. We don't have time to get into it today, but you should definitely be knowledgeable about it because it's really interesting, especially in the topic similar to the conversation that we've had today. So, Doug, just a couple more questions. I know you got to run in just a second and our time's coming to a close, but what are some of the lessons that you've learned investing in all these different countries through multiple different market cycles? I mean, what are some of the key takeaways that you could share with us?
The experience is worth as much as the money. You've got a much richer, broader life if you explore all the nooks and crannies and different people, weird people in the world, as opposed to just staying in your hometown and living and dying there. That can be pleasant, but I think that it's all part of a package. So it's treated me well financially, and it's treated me well from an experiential point of view. And that's what I recommend that people do, is get out of your box and get on an airplane.
Yeah, I think that is absolutely great information. Doug, before we run, make sure to just let listeners know how to get in contact with you and some of your websites that you promote.
Okay, well, I have a lot of free articles that I write in addition to the paid subscriber stuff we have. So go to kcresearch.com. That's one. Go to internationalman.com. That's a free publication and very good, incidentally, that we publish. So kcresearch.com, internationalman.com, and highgroundbooks.com, where Speculator and Drug Lord and next year Assassin will be available, and they're available on Amazon too. So I hope some of our listeners do that.
I love it, and I'm sure they will. This conversation has been absolutely awesome. Doug, thanks again for coming on.
And thank you for having me on, Hunter.
All right. Well, thank you again for taking the time to check out this episode. Obviously got to touch on a lot of stuff that I'm interested in, but we definitely have not talked about on the podcast before. Again, if you're interested in getting contact with Doug Casey, feel free to contact him at the links provided in the show notes page. Additionally, remember, if you want a copy of that free ebook, which is on conducting due diligence in every single major asset class of commercial real estate, make sure to create an account with Cashflow Connections, and we will send you it as soon as it's done. Thanks a lot.